How to find liquidity in Forex. Hello traders, this is Igor from FX Igor YouTube channel, and when I say liquidity, I always see liquids like river that flow. But the most important thing when we talk about liquidity that we know always two players, retail traders and brokers. You as a retail trader, you have a MetaTrader 4 platform, MetaTrader 5 platform, you trade your computer, you have your own broker, but you forget two very important players for Forex market. The first is multiple facilities, multi-trading facilities, and the other very important player is a market. But before market maker, let me define liquidity. Forex liquidity represents the volume of all trades for a particular currency pair or the whole Forex market. So Forex liquidity show how much money circulates in Forex. High liquidity imply significant trading activity and high supply and demand for an asset. So right now we understand the term liquidity. And now when we know that and we can imagine how much money circulates in Forex, we can talk about market makers. So not all markets have a good balance between buyers and sellers. Not all markets are efficient and liquid. This is where market makers come in. They provide liquidity and efficiency by standing ready to buy and sell assets at any time. So in Forex, for every buy trade, there is one sell trade. For every sell trade, there is one buy trade because of market maker. And I just want to tell you, because I see on the forums, YouTube, on everything, oh, is this broker market maker? Oh, this is broker market maker. Oh, it's a felony. Oh, it's a crime. No, my friends, market makers exist. This is the way how industry works. And to be a market maker is nothing problematic. And the problem is in head of the people is you don't need to think about it. Why? Because when you create a buy trade, you trade the price. You think about stop loss, you think about target. If you achieve the target and make money, your brokerage company will pay that. You don't need to think what they do on the other side. Is that trade goes or not go in the real market, or does a Forex broker just keep that trade because for some traders they figure out that lose all money all the time and then want to risk money, etc., etc. So people think a lot about that things. Why you think about it? If you make profit, you will be paid. There is no trader, Forex trader from a regulated broker that create a profit and didn't be paid for that profit. They want to withdraw money. So this is not problem. Every regulated broker today, every single broker will pay you because there's no problem with payment except if they're a false broker that just want to scam people. But all regulated, particularly big brokers, there's no problem. I'm watching every single day. Job is to find and monitor reputation every single broker. I don't see problem with brokerage company. And when I see it's 1 in 6 months, and that problem is usually about some closer trades in some time, etc., etc. But usually brokers have enough money to pay traders because especially retail traders are so small that you cannot imagine how retail traders small, how that all amounts of money and profits are funny for them because they really earning a millions of dollars. So when you talk about liquidity, just imagine this picture. As the price in trading pool moves in response to trading activity, the automated market makers intuitively shifts the range of provided liquidity to match the new prices, limiting slippage and impermanent loss. So just remember this picture. This is the way how all that automated market makers work. And this is the very easy. So you have a tight spreads because this technology. So what is important for you? As you can see, when we have a volatility, we usually talk about low liquidity. So this is very important for you as a trader to understand that when you have a strong, for example, euro-dollar moments in the morning or during the market, European session, US session overlap, have a huge liquidity, huge volume. But sometimes when you have a news, you have a strong volatility. And this is the moment when we don't have enough buyers for sellers, sellers for buyers, price go up, go down. There is a problem, and sometimes we can see low liquidity even in the Forex. But what is important for us when we talk about deep liquidity, we know that you have a strong liquidity with low volatility we have tight spreads, and this is important for you to understand. And usually you will see that euro dollars, it's less than pip for a lot of forex brokers when you trade and have a huge and strong liquidity. So the volume indicator can't measure how many contracts are sold in forex because there's no contracts there. Volume indicator, when you want to find and compare the volume and everything, it is calculated by how many ticks the price moves up or down in any time of period. So in forex, we have a price and time. We talk about volume, we don't know that. So in your head, if you think, oh, I just see the huge spike in volume, so the Deutsche Bank buy or purchase dollar, or right now these big banks sell. No, we don't have that nation. I don't know in trillions, billions, or any amount of money. I don't know how much big bank right now sold or purchased some asset forex industry. We don't know that, and this is a huge problem because with that kind of information, we could maybe better predict the market. So always remember this: volume, liquidity, usually when we talk about forex, is correlated with price, because when we calculated volume, we use price in calculation. But right now, I want to show you how you can find liquidity in the forex market. So as you already know, we have indicators in MetaTrader 4 platform. We have a volume indicator. It's a accumulation distribution, money flow index on balance, volume, and volumes. I will open volumes, for example, and here you can just see the moment with the high volume and the low volume. And usually you will see that during the night we have a low volume, and that during the day we have a higher volume. But like I said, it's always correlated price, because volume is calculated price. So please do not include the volume too much in your models, in calculations and everything. Use this smartly just to know if something happened or not. For example, you can see what's happened with volume in some moments, decrease, increase, etc., to plan your strategy. But like I said, every single sell or buy trade, you will always find different side. For buy trade, you have a sell trade. For sell trade, you have a buy trade, and you don't need to exaggerate in this level. You need to really, like I said, to concentrate very important price level. So the price levels is actually forex liquidity levels that you usually need to understand and monitor. For example, I will just write on the chart, put one indicator. I will put supply and demand zone. For example, these kind of indicators you can use to find interesting zones for your trading. And you will see like this. For example, I just watched British pound dollar, that we have important price levels, actually supply and demand zones, and that important liquidity levels usually correlated previous low, previous high. So what you need to do is always to make this kind of combination. You put the volume indicator like me right now, and you use to find the previous low and high, and to see what's happened there with volume and everything. And the interesting path for you is right now, as you can see, that the price several times tried to go up, for example here on British pound dollar above 1.21 and failed. So this is the very strong important price level. It's a previous low, it's a previous high, previous support now is a resistance right now. And as you can see, if the price breaks 1.21, we can see maybe in the short term some kind of the trend shift British pound dollar. How I did it, just like you see, I found the huge spike in volume. I see the previous low and support level. I can use the supply demand, but I can do this without any indicator. I just need to watch the previous low and previous high, and this is the whole story. So what I want to tell you is, if you want to find important price levels, this is enough in trading. You can make combination with volume just to see if you doubt about some price level. You just check the volume, and then using the volume, if you see the huge spike in volume, if you see this a previous support, the previous resistance, it's a daily high, daily low, something like that, monthly low, monthly high, weekly low, weekly high, this is enough for you to make decision and put the new support and resistance and find important price levels that can be important liquidity levels. Why I talk about liquidity with these important price levels? Because if right now the price of British pound dollar go above 1.21, it will be a little bit crazy. A lot of stop loss will close, a lot of pending orders will run, and in that moment we will have a huge spike in volume. So liquidity, volume, important price level, everything is correlated, and this is the conclusion of this video. So I wish you a great day, and bye bye.